Well, good morning, everyone. And Angie, thank you so much for this opportunity to share a little bit about improving credit. And so let me go ahead and share my screen. Okay,
Yeah.
so again, I know that for everyone, they say the credit score is something that we it feels like a big black hole. We don't know what goes in there, and one day it goes up, one day it goes down, and a lot of people just wonder how to kind of break that black hole, right? And so this morning I want to share a little bit about that. Just a quick introduction of our agency. I run again a nonprofit called Faith and Community Empowerment. We are a HUD approved housing counseling agency. And so over the years, we have trained over 10,000 individuals in terms of helping them be on their way to home ownership. And so we're a HUD approved counseling agency, and we provide certificates that will help people qualify for down payment assistance. Angie made mention of some of the clients that we have helped. And towards the end, if we have time, I'll do a quick video as well. But we do help with not just home ownership in terms of purchase, but also with foreclosure as well. And then just in general, we are an advocacy organization that helps build capacity and bring a lot of resources. So home ownership is one, but we have small business assistance. We've done disaster readiness, even helping people with electric car subsidies, right? So again, a lot of leadership programs that we run as well. And I just want to say real quickly, some of you may be aware of housing counseling agencies, but many are not. And and it's a great thing that, first of all, that you're here today, right? They say that there's a difference between renters and homeowners. There is not just a 36 times, difference in terms of wealth. There's a $200,000 difference between renters and homeowners. So I just want to plant a seed there. But in addition, by connecting with a housing counseling agency and going through some of this home ownership programs, you'll be able to become a lot smarter, get access to down payment programs. But in addition, you'll decrease your likelihood of going into foreclosure by 30%. So by starting off right with the right mentors, like today, you're hearing from experts, right? And again, having that expert guidance is so critical. And in the home buying process, a HUD approved housing counseling agency can do a lot of help for you. And then finally, for those of you who may already own a home, or when you do own a home, life happens and you might go into foreclosure. In those situations, by again connecting with a HUD approved counseling agency like FACE, your likelihood of getting a loan modification increases by 286% or 83%. Okay. So again, what goes into a credit score? Well, this is the secret sauce here, right? And so the part that will give you the biggest bang will be your payment history, that you paid on time. And particularly your mortgage payment is going to have the biggest impact. So if and when you do have a mortgage, in terms of pecking order, the last thing that you want to default on is your mortgage payment, right? Don't pay your utility bill. I don't know, maybe utility, you need the gas to cook your food, so maybe not that one, right? But your credit card bill and other things, I would say, let those go first before you let go of your mortgage payment. So I just want to say on time payment, so critical. That's 35% of your score. And then 30% is how much you owe. And particularly, this is a little trick. So let's just say you have a credit limit of $1,000. You should try to keep your balance 30% and under. So $300 and under, because as your debt level continues to creep up over that 30% threshold, that will hurt your credit score. Okay. And then the next piece is the length of credit history. How long have you been using credit? Now, one of the things that sometimes people get inspiration and say, I'm going to fix my credit, I'm going to pay off all my debt, and you start cutting away all your credit cards, right? Some of you have done that. Well, one thing that you should be very mindful is don't do that, particularly with your first credit card that you ever got, because that gives you the length, right, of your credit history. And the longer that you have, that has an impact on your credit score. And so let's just say that in high school, after you graduate, you got your first credit card, right? And you're going, well, it's probably like Sears or something like that. You go, well, you know what? I'm not going to use that. And you just cut it away and you cancel and you go, I'm so happy. I'm a free woman or a free person, right? Well, you know what? If that has been one of your oldest, as soon as you cancel, it will impact your credit score. So don't do that. Maybe if you want to cancel more of the recent ones, but your oldest, don't do it. Okay. And then the types of credit used. So again, they want to know that you are a savvy credit user. And so in that way, if you use credit responsibly, let's say with a credit card, with a student loan, with your auto loan, those are again all different examples of types of credit. And it just shows that at the end of the day, you are someone who's trustworthy, that in different settings of life, the way that you have used credit, that you've been a responsible user of credit. And it's just like friends, right? Sometimes, certain friends, you're going to lend them money. Certain ones, you've learned not to lend them money because they've demonstrated that they were not trustworthy. So it's the same concept with creditors. And so that's something to note. And then 10% is a new credit. How much available is new credit, right? And if you start, opening up new credit, well, that's like especially like you open up several credit cards, that's kind of a big no-no. And every time a new credit is gained, they will do a credit score check. And unless it's a soft pull, and that's an industry word, each time you pull, your credit gets pulled, your credit score will be hit. So again, you want to be wise in terms of when you're opening up new credit. If you're shopping for a car, you should do it like all within a month period. They will count it as like if it's a similar pull of credit, they will recognize that if it's done within a short period of time, like less than a month, and it'll be considered like a one pull, right? But you're saying, well, let me go check here, let me go check there, and you're doing it over the course of like several months, it will ding your credit score. So just be mindful of that. So what is a good credit score? Well, there are three major credit score companies: Equifax, Experian, and TransUnion, and they each have their own secret formula or secret sauce, right? But just in general, a score between 700 to 750 would be good score. Okay. But between 560 and below, very bad. And if you were to go get a loan for your car or your furniture or your house, that 560, if you do get a loan, you will have to pay a premium. So just be mindful of that. Between 560 to 650 is a little bit doable, but it's still bad, right? And then from there, 650 to 700, that one is fair. You know what? I think you can do, especially like I think around 680. And then from 700 and on, great. Asians like to have a perfect score, but you don't have to have that 850. As long as you're in that 700 to 850, all good. And again, why is this important? It's not just for buying a home, but for your job, for your utility bills, a lot of other cars. You will pay a premium if you have bad credit. And so again, credit, I think, is very, very important. So let's take an example. The penalty that you'll pay. So here you'll see a $250,000 mortgage. And, if you have bad credit, you will not get the 4.2%. You'll get 5.75. Although actually this rate is pretty high these days, right? Interest rates are a lot lower, but just you see that 1.5% difference after 30 years. The difference is $82,000 that you're going to have to pay in extra dollars just because your credit score was bad. So just be mindful that, again, your credit, having a good credit could make a world of a difference. Now, life happens again, and you could have a bad credit score, right? Because of bankruptcy, judgments, student loans, etc. And how long does this stay on your credit report? So any negative information, 7 years, bankruptcy, 10 years, judgments, 7 years, student loan, 7 years, inquiries, right? Like you want to get a new, get some new credit card. Well, they'll pull that, right? And all of it shows up on your credit report. And it runs from the date the event took place. And on that credit report, it will show all your, again, bankruptcies and, jobs. Just there's a lot of information there. And what I've seen in our counseling session with our clients is that a lot of times they give us limited information. But I'm going to tell you that, again, when you're going through a job interview, you're trying to buy a home and get a mortgage, when that person pulls your credit, all of it will be there. Again, in all my years of experience, I have to say it's very rare that someone tells me everything. Because a lot of times, not because they're lying, but they just forget. But your credit report will show everything. And that's how critical, again, your credit report is. So what are some tips for improving your credit? Well, you know what? Particularly if you're Asian or you have a common last name, the likelihood that you're going to have some kind of inaccurate information goes up significantly. And so you want to make sure that you correct any inaccurate information. And then again, pay your bills on time and minimize that outstanding debt, right? That 30% bar. And apply for a credit only when you need it, right? Don't just do it for fun. Or like you go to Macy's and they'll say, we'll give you a 10% discount, if you open your credit card today, and you go, oh, okay. And you just do that. Although I'm guilty, I've done that a few times. And then using your credit cards responsibly. And there are ways to reestablish credit. So don't give up. There are, secure accounts where you're able to pay the money up front, but then you show that you're able to then, in essence, you're using your own money, but they will report out that you have paid responsibly and on time. And so that's one way that you might be able to reestablish credit, or being able to go with, your parents or your spouse, although again, you don't want to put them at risk by your bad behavior. But, and so again, that is one way. Some other ways that you could reestablish credit as well. Oh, and at our homebuyer education class, one of the bankers told us a trick, and it works because he gave the tip, and basically during our break, the client decided to just implement it, and boom. So as mentioned, remember the 30% bar, right? That line, right? And so basically, if you have paid responsibility on your credit card at least a year, right? Let's just say you have a $1,000 credit limit credit card, and you paid the balance is no, let me second. So let's say it's a $500 credit limit, and you have a 5 times 60 $300 balance, right? But you have paid on time. You could call the credit card company and say, I have been a responsible, timely payee, and I would like to ask for the credit limit increase, right? So let's say they will increase it from 500 to 1,000. Well, at a $500 credit limit, a $300 balance is 60%. But suddenly now your credit limit was increased to $1,000. And suddenly now your credit debt level is now only 30%. It's instant, right? And so this is an opportunity where your credit score will go up because now they'll see it that your balance has gone down to 30% without you doing anything except asking your credit card company to increase your limit. Of course, this is not a license, right, for you to go and spend some more money, go to Las Vegas. But that is one tip that has worked really well as well. And here are some resources. So the annual credit report is free. I heard actually through usually you're supposed to be able to get one report free from each of the bureaus once a year. But I heard during the COVID pandemic that you're able to do it a lot often. Someone is, I think, coming in right now. And here are some other companies, Credit Karma, Wallet Hub, NerdWallet, where you could get a credit score and the credit history for free. The annual credit report does not have a credit score, or you would have to pay separately. But I think for your purpose, it's good enough. For your bank, a lot of times we'll be able to also provide it for free as well. And Freddie Mac has a great curriculum called Credit Smart, and you could go get there for free. And I just want to share quickly. I don't know, someone is liking something as well, and I don't know how to correct it, but there are a lot of good things in life, and the down payment assistance is one of them. And I just want to highlight one, but there are so many. The city of LA has a program with $90,000 of down payment assistance, but Orange County has an $80,000, LA County has $75,000, California called CalHafa provides up to 3% as well. But I just want to share with you, look, you'll see a person with one, you'll get 90,000 with an income limit of 63,000. So you don't have to be dirt poor. A family of four, 90,000, you could have an income of 90,000. But currently right now, they also have a MICA program, which is moderate income. So a single person could have income of 94,600. For a four-person, 135,000. You'll get $60,000 in down payment assistance. And then for the MIPA, which is at the higher end income, 35,000, and a single person can get up to 118,000. So again, I just wanted to highlight this for you. And then just various cities that are available through the city of LA. I've already mentioned about CalHalfa, and you could take our class. Sign up at facela.org. As mentioned, an 8-hour certificate is a requirement for many of those programs. And with that, I'm going to just share a couple of videos of people who have become homeowners through our program. The first one is 22 years old. His income was less than 35,000. And ABC7 covered our program.
Buying a home in Southern California is out of reach for many people, but a program that helps low-income wage earners purchase a home is getting some rave reviews. 22-year-old Vicente Rivera just bought this $249,000 condo in Lake Balboa. His down payment, just $2,900. This was made possible by the nonprofit group Face LA, which stands for Faith and Community Empowerment. FACE works with the city of LA and private companies to find affordable housing for first-time buyers.
It makes me feel amazing. I'm literally on another high right now. Like, I feel so high up life, like my dream has really came true.
Vicente says he'll actually be paying less for his mortgage than he did for rent. For more information about the program, go to facela.org.
So I will not go over the next person, but we helped her with, oops. We helped her with over $132,000 in down payment assistance. So I don't know if we will take any questions, but basically you could get in touch with us at info@facela.org or www.facela.org. Boy, someone is having a lot of fun. So with that, I don't know if anyone has any questions. I'd be happy to answer. I think Saeed Ghaffari is asking a question.
I do have a question. Thank you. Is the MIPA program for first-time homebuyers? Because most people with that kind of income may not be first-time homebuyers.
It is for first time, but a lot of times people think, oh, well, you know, if I had owned a home before, then I'm disqualified. But if you have not owned a home at least 3 years and you haven't taken a tax deduction, mortgage interest deduction, then you would still qualify as a first-time home buyer. And again, each program, they have different definitions of what a first-time home buyer. Certain programs, if you just got a divorce, maybe you might qualify as a first-time home buyer. Les.
Hi. I had a question about the COVID relief that the mortgage lenders offered during COVID. Does that affect your credit score?
It does not. It's supposed to not impact your credit score.
Mm-hmm.
And
Okay,
the
and then-
relief, I believe, now has been extended to March. I think they're going into September as well. So
Okay. And then the second question is, if you pay off your credit card in full every month, is it still affected if you're spending more than 30%, even though you pay the whole thing off?
well, it's kind of interesting because depending on when they pull your credit, right?
What the balance is at that point?
Yeah, so that's always a
Okay.
little bit tricky in terms of timing. So when you're going for a mortgage or other stuff, you should give yourself plenty of that time as well. Yeah.
Thank you.
Hyepin, you also have some questions in the chat if you would like to answer. It looks like there's a question about the website for MIPA, M-I-P-A. If you could drop that in here. And then also if there is, where did it go? Oh, the website for Orange County Down Payment Assist as well.
You know, let's see. Okay, how about this? Because it'll be a little tricky trying to pull it, but you can look up City of LA, LIPA, Down Payment Assistance Program. At least let me put that down. LIPA, Down Payment Assistance.
That's good info, Hyepin. And I really think that I hope all of you caught that 30% rule, because that's a huge one. If you just pay everything down to below 30%, it's like the little miracle burst that happens on your credit score.
That's right. That's right. And again, you know, I want to say if you are interested in these down payment programs, again, the first step is for you to take the 8-hour course. And just FYI, for these programs, if it's for the government entities, they designate certain lenders. It's not even lenders, it's loan officers, right? So they have to approve that the lender, like let's say Bank of America, but it's not all Bank of America loan officers, it's certain ones that have been approved, right? And then even there, amongst those approved loan officers, certain ones really are committed and know how to do it and have done it successfully versus others that may have just gone and taken the course. So that's where, again, a counseling agency will be able to walk you through and identify people who will be the best match for you. So just want to put that out there.
And is that what people should Google? Like, for example, we've got people watching all across the country here. So should they what term should they Google with their particular city and state so that they'll come in front of, the best agencies?
So I would say a good place to start is the HUD website for HUD approved counseling agencies, right? In your area. So go to HUD.gov and look up, HUD approved housing or just look up housing counseling agencies, right? But really the HUD approved is the one that you want to go to and go from there.
Wonderful.
For California, we'd be able to help. For Orange County, there's a certain nonprofit that does specifically for the MAP program. But for the rest of California and certain bank programs, again, they're not bound by certain geographic boundaries as well.
That's great. If you guys do have additional questions for Face LA or anything about credit, feel free to drop it in the chat. All of our speakers and attendees here are definitely happy to help you get your questions answered. As you know, it's hard to do anything without a good credit score when it comes to real estate. So unless you have a grandma with a lot of cash, right?
Or rich uncle or whoever, right? And that's where, again, the down payment assistance program, especially like the soft second, is kind of like having a rich uncle or a rich grandmother, right? They're going to give you the money. It's kind of like they're going to like give you that hand up to just get your foot in the door, because again, the vast majority of people, the barrier is that they don't have the down payment, that 20% down. Although it's not necessary, there are certain programs that are even 0% down. A lot of people don't know that. Again, but still, you usually need that lump sum that many people don't have, and that's where the down payment program does allow you to do that. And again, I know that there are many people who are from communities of color, immigrant communities. You should all see this documentary called Redline. So just historically, the vast majority of people have gained wealth because of homeownership. But for certain communities, they have been left out systematically. And that's why there's such a big wealth gap between particularly the white community, Caucasian community, and all other communities because of that systemic discrimination. And so this type of down payment program is to kind of help give some of that hands up, that because we don't have rich parents or rich grandmothers, that could help us along the way.
Well, and that's part of what we're trying to do here with this event, how important it is to get into real estate and have that opportunity for homeownership yourself. So,
yes.
yeah, well, thank you again, Hyepin. That was absolutely wonderful.